in the live virtual revisionary class organized by Board of Studies of ICAI. So friends, I'll I'm going to talk about Ind AS 116. It's a detailed standard, it's a very lengthy standard, and we'll cover this standard in today's session in 3 hours, and we'll revise this standard. So in the detailed class, this standard was covered in 5 to 6 classes. So if you don't have a comfort on this standard, I would request all of you who is listening me right now. So please refer the detailed classes on Ind AS 116. Then you will be able to get benefited by the revisionary classes. Okay. So friends, my name is Alok Garg, and I'm going to take you through with the Ind AS 116. So in the next 15-20 minutes, I will set the context, I will revise the concepts, and then I'll come to the practice questions. And before taking into the complex practice questions, I will discuss the concept relating to those questions and I will solve those questions. Okay. So friends, talking about Ind AS 116 leases, this standard is completely different than our old accounting standard 19 on leases, right? So in AS 19, there was a concept of operating lease, there was a concept of finance lease from the lessee perspective, right? But in Ind AS 116, there is no concept of classification of leases. Lease means a lease, right? So the accounting treatment is same for operating lease, for finance lease from the lessee perspective. So if I talk about this standard Ind AS 116, this standard, which was notified on 30th March 2019, applicable to India from 1st April 2019. So this standard has eliminated the classification of leases for the lessees, right? So now there is no concept of operating and finance lease from the perspective of lessee, and lessee has to recognize right of use asset and lease liability. Okay. For example, a lessee has taken a car on a lease for 3 years and the lease rental is 1 lakh rupee per annum. Okay. So in our old accounting standard, it is a operating lease. Okay. So what will be the accounting in old accounting standard? Simple: rent account debit to bank account, lease rent account debit to bank or landlord or lessor. But in the new Ind AS 116, what is the accounting? So in new Ind AS 116, the accounting will be ROU asset account debit to lease liability. ROU asset to lease liability, right? ROU to lease liability. And how you compute your ROU to lease liability? So whatever lease rental you are going to pay in future, 1 lakh, 1 lakh, 1 lakh every year, you have to do the discounting. You have to compute the present value of the future lease rentals, right? And whatever will be the present value of the lease rental, that will become your lease liability and that will become your right of use asset. Now let's take another example. The life of the car is 10 years and the lessee has taken a car for 9 years on a lease basis. So going by the old accounting standard 19, this is a finance lease from the lessee perspective. Okay. So you will do the finance lease accounting as per AS 19. But what about Ind AS 116? In Ind AS 116, the lessee will say that, oh, I have to pay a lease rental for 9 years. Whatever I need to pay to the lessor, what I'll do? I'll compute the present value of the future payments, present value of all the payments, right? And whatever it will come, what accounting entry I will pass? I will pass an accounting entry ROU to lease liability, right? So it doesn't matter, be it operating lease, be it finance lease, according to the old structure, doesn't matter, right? In Ind AS 116, the accounting is same. From the lessee perspective, the accounting is right of use asset to lease liability. Okay. So one thing is very clear. This standard has eliminated the concept of operating lease and finance lease in the books of lessee. In the books of lessor, still it exists, right? For the lessor accounting perspective, the classification of operating lease and finance lease still exists, but from the lessee perspective, it has been eliminated. Fine. Second aspect. This standard has changed. This standard has changed many industries dramatically and the accounting of many industries dramatically, right? Airline, oil and gas, telecommunication, retail, information technology, right? So these companies have a lot of leased assets. My dear friends, in our old scenario, if I talk about in our old scenario, For example, when it is a case of a operating lease, okay, like telecom industry put the tower on your land or on your terrace, on your roof, right? So whether it is a operating lease or finance lease, from the old standard perspective, it is a operating lease. They are not taking your house along with them at the termination period, at the time of termination. Okay, they are not take the land. Land has an indefinite life. They will not take the land along with them. So the point is, these telecom industries, when they entered into a leasehold arrangement to install their towers, it is an operating lease. So prior to Ind AS 116, what they are doing? They are debiting their lease rent expense and crediting their lessor or bank, right? But after Ind AS 116, what happened? They have to capitalize their right of use asset and they have to credit their lease liability. Now, friends, when they have capitalized ROU asset and recorded lease liability, now this ROU asset is going to be depreciated over the lease term. The lease liability has to be the interest on lease liability has to be added back to the lease liability, and from the rental payment this lease liability has to be reduced. So one thing is very clear, in Ind AS 116 the rent expense is shifted by depreciation and finance cost in the P&L. Depreciation and finance cost in the P&L, right? Second aspect, all the operating leases as per the old standards, all the operating leases as per Ind AS 17, the old standard, old Ind AS on leases or accounting standard 19, all the operating leases were sitting outside the balance sheet, means no recording of asset, no recording of liability. No recording of asset, no recording of liability. Okay. So friends, but now you are recording asset and you are recording liability also. It means all the leases will come into the balance sheet. Like I took the example, na, if a lessee has taken a car for 3 years or lessee has taken a car for 9 years. Okay. So in the old standard of Ind AS or AS, I am talking about prior to Ind AS 116. So when it is a operating lease, the car will not capitalize as a right of use asset in the balance sheet in the old standard. But now every leases has to be capitalized in the balance sheet if it is a lease arrangement, right? So in your balance sheet, asset and liability will come together in your balance sheet, which was not the case in case of operating leases. Okay. Third aspect. So we talk about P&L, we talk about balance sheet. Third aspect, cash flow. Friends, this lease rental payment was considered as an operating cash flow in our accounting standard or old Ind AS 17. But in Ind AS 116, this lease payments, the payment of lease liability along with interest has to be considered as a cash flow from financing activity. So these are the three major changes in the P&L, balance sheet and cash flow, right? Friends, talking about the objective and the scope. So basically, this standard is applicable to all the leases, including sub-leases, except few exceptions, exemptions are there. So very theoretical part. Then recognition exemption I'll cover later on. What is a lease? Friends, for applying the Ind AS 116 accounting, the first important concept is what constitute a lease, right? And friends, for constituting a lease, there are four items which are there in this standard. What is a lease contract? A lease contract is a contract where there is a transfer of right to control the use of identified asset over the period of time in exchange for a consideration. Friends, what is a lease contract? In a lease contract, there has to be two parties at least. In a lease contract, there has to be two or more parties. Yes, in a lease contract, there has to be two or more parties. Number two, in a lease contract, there has to be identified, there has to be an asset. अगर asset ही नहीं होगा तो lease किसकी होगी? Yes, there has to be an asset. In the old standard, the word used was asset, underlying asset. Underlying asset and asset is one and the same thing. Underlying asset means जिस asset की lease हो रही है, the asset which is subject to the lease arrangement. But here the word uses identified asset in Ind AS 116. Okay. Then So there has to be two or more parties, there has to be asset, there has to be right to use, right? In the old standard, the word is right to use, right? But in this new, in this Ind AS 116, the word is right to control the use, right to control the use, okay? Right to control the use. So in Ind AS 116, the word is right to control the use, right? The word is identified asset. And of course, there has to be a lease period. There has to be a lease period and there has to be a lease payment, means consideration. Lease period means period of time. Lease payment means consideration. Okay. So four things has to be there. Asset has to be there. Right to control the use has to be there. Lease period has to be there. Lease payment has to be there. We'll quickly discuss all these four concepts. Okay. Friends, what is the difference between an asset and identified asset? So identified asset, an asset will become an identified asset when two conditions will be satisfied. When two conditions will be satisfied. What are the two conditions? Condition number one, the asset has to be explicitly or implicitly specified in the contract. The asset has to be explicitly or implicitly specified in the contract. Okay, means like property contracts. In the property contracts, the flat number, the house number, the warehouse number, the building number, the entire address of the relevant, subject matter of the lease, right, has been, the entire address has been mentioned in the contract. It is explicit. What is implicit? What is implicit? For example, a lessor is a transporter company and lessor has only two buses. Okay, lessor has only two buses and lessor has given both the buses to the lessee on a lease, right? While lessor has not mentioned the registration number, RC number, right? The name, the number of these buses, the lessor has not mentioned in the contract. The lessor has mentioned that both the buses has been given on a lease. Okay, and the lessor has only two leases. The lessor has only two buses. Okay, so it will be considered as implicitly specified in the contract. I have one mobile. I have given that mobile to you. I have not written the name and model of the mobile in the contract, but it is understood that whatever I have given you on a lease. So it will be considered as implicitly mentioned in the contract. Generally, in our commercial life, generally it is explicitly mentioned in the contract, right? Number two is very important. The lessor should not have a right to replace the asset. The lessor should not have a substantive right to replace the asset. What does it mean? Means lessor will not replace the asset for his own benefit. For his own benefit. Sir, what does it mean? For example, a lessor has given a new Mercedes car to the lessee for a lease basis, right? Now, lessor, in the future, lessor is predicting that I am operating in Agra and lot of foreigners are visiting Agra to see the Taj Mahal. Okay, the eighth wonder of the world. They are coming and visiting Agra to see the Taj Mahal. Now, what happened? What happened? The lessor has keep this right to replace the asset clause in the agreement. Means whenever a foreigner will come and whenever he will ask for a car, lessor will give this new Mercedes car to that foreigner and lessor will provide the old Mercedes car to the lessee. Why? Because when lessor will give the new Mercedes car to the foreigner, probably they will give the more price. Okay. So it means lessor has a substantive right. Substantive means the lessor can exercise the right to replace and lessor will get benefited from that replacement. Okay. So friends, if lessor has a substantive right to replace the asset, it will not be considered as a identified asset. Okay. Means by the replacement, lessor should not have got the benefit. For example, the lessor has given a car on a lease basis to the lessee. Now, the car, every year, the car need a service. Or when the car met with an accident or car got damaged, it has to be went to the workshop and it has to be it has to be repaired. Okay. So in that case, lessor is arranging another car to the lessee. So friends, in this case, whether lessor is getting any benefit, answer is no. The lessor has to replace because this car needs a service or repair. So it is kind of a protective right, not a substantive right. Okay. So if his rights or obligation to substitute become exercisable only on occurrence or non-occurrence of an event, then this right will not be considered as a substantive. For example, upon damage of a car. For example, upon service of a car. Okay. So this is an identified asset, right? So the lessor should not have a substantive right to substitute the asset. Sir, if the asset will not be an identified asset while it is a lease contract, right? But in the lease contract, this replacement clause has been mentioned, and lessor can replace the asset for his own benefit also. Sir, in that case, what will be the accounting? In that case, remember the old accounting. What was the old accounting? Remember the old accounting. What was the old accounting? What was the old accounting? Rent expense account debit to bank, right? Rent expense account debit to bank. And friends, the classic example is airport spaces. Okay, you remember? So you must have visited airport, and you remember this example in my full class where I have told you where the airport authorities are providing the boarding counter spaces to the airlines while it is a lease contract, but airport authority has a discretion to replace the to replace the space. For example, when you went to T3 or Terminal 2 in Delhi, you have found that the Air India counter is in the boarding gate number 4. So Air India counter is in front of gate number 4. After 6 months, when you visited, you found this Air India counter is at is at gate number 3. So basically, if the airport authority, the lessor has a right to replace, the airline will do the accounting for lease rent expense to bank. Why? Because it is not an identified asset. So that is why for this airport spaces, airlines are doing an accounting of expense to bank, not the right of use asset to lease liability. Now, second example is right to control the use of asset. Okay. Sir, what is the difference between right to use and right to control the use? So for example, I purchased a new Skoda car. Karan is my favorite student. Karan came to me and Karan asked, Sir, can you? So I am traveling to Europe for 15 days. So Karan told, Sir, can you lend this car to me? Can you provide this car? Can you give this car to me for 15 days? Because you are not in India. So can I use your car? I said, okay, Karan. And I have hand over the keys to Karan, right? For 15 days. So Karan will use this car to for 15 days. Okay. Karan is getting a right to use of the car for 15 days. But I am giving a lot of instructions to Karan. I am saying, Karan, listen. So you have to use the car only in Delhi NCR, only in Delhi, Noida, Gurgaon, not beyond that. Second, Karan, don't take this car on the roads after 10 p.m. in the night. रात को 10 बजे के बाद आप इस कार को नहीं निकाल सकते. Third, you have to drive this car at your own. You can't give this car to your family and friends. Okay. So you have to drive this car, not even to a driver also. Fourth, Karan, you need to get the fuel in this car only from the XYZ petrol pump. Okay. So this petrol pump is located in Gurgaon, Sector 15, Part 2, Gurgaon. You have to get the fuel in this car, petrol in this car only from this petrol pump. And every time you have to send me the slip, the photo of the slip, whenever you get the fuel. So I am giving lot of instructions to Karan. How to use, for what purpose the car has to be used, how to use the car. I am giving lot of instructions to him. Friends, tell me, while Karan has got a right to use, but whether Karan has got a right to control the use, who is controlling the use of the car? Whether Mr. Alok Garg is controlling the use of the car or Mr. Karan is controlling the use of the car. Alok Garg is controlling the use of the car while Karan is using the car. Karan has a right to use, but right to control the use is lying with the Alok Garg, right? So friends, this is a difference between right to use and right to control the use. So second condition is right to control the use of an asset has to be transferred to the lessee, right? To make it a contract under Ind AS 116. So friends, like we discussed, for identified asset, there are two conditions. Likewise, for right to control the use of an asset, there are two conditions. Condition number one, right to obtain substantially all the economic benefit from the use of the identified asset. So whatever benefits are there, benefits from use of the asset. So benefits from use of the asset has to be transferred to the lessee. So all the benefits from use of the identified asset has to be transferred to the lessee. Has to be transferred to the lessee. Okay. So benefits from use has to be transferred to the lessee. What could be the benefit of the use? The primary output, the byproduct, or any other benefit. For example, the lessee has taken a machinery on a lease basis. So what is the primary product from the machinery? Output, goods produced. And for example, government is giving an incentive. Government is giving an incentive. Government is giving an incentive to the lessee. Okay, for per unit of output. This is a byproduct. Okay, or this is any other benefits. So this benefit should also lying with the lessee because this benefit is coming from the use or from the production. Second, right to direct how to use and for what purpose the asset is going to be used should belong to the lessee. Okay, so this is the third aspect. Then, so we discussed what identified asset. We discussed right to control the use of the asset. Then the concept is inception date of the lease and the commencement date of the lease, my dear friends. So before lease period and lease payment, let me quickly cover this concept. What is the inception date of the lease? So Karan is my favorite student, and Karan came to Delhi for the purpose of studying CA final classes, for taking the CA final classes. So Karan came to me on what is the date? So let's on 1st of July. So Karan told, sir, I want a one room flat, right? 1 BHK flat, and I want to take it on a rent. So I heard that you have the 1 BHK. Can you provide me on a lease basis for 2 years? I said, Karan, right now already the tenant are there. So this house will be vacated after 1 month. So Karan said, okay, sir, what is the rent of this house? What is the security? So I told him the rent, security, everything, and he agrees, and I also agreed. Okay. He has given me the token money as well. So on 1st of July, we agreed to the principal terms and condition of the contract, and from 1st of August, I will hand over the keys of this flat to Karan. Okay. So friends, what is inception date of the lease? Inception date of the lease is the date when the principal terms and condition has been agreed. Okay. So in this date, the entities, the parties will identify whether it is a lease contract, means whether it is identified asset, whether right to control the use of an asset has been transferred. Lessor will classify the lease into finance lease or operating lease. Friends, I told you, na, for lessee there is no classification. For lessor still it is there. What is the commencement date? So commencement date is 1st of August when Karan will get the possession of the house. Okay. So on this date, the entities will determine the lease term. What is the lease term under this contract, and recognize the lease, do the accounting of the lease, pass the accounting entries. Okay. Friends, now coming to the lease term. What is the lease term? Friends, lease term is equal to non-cancelable period plus rent-free period. Okay. From commencement date, it is non-cancelable period plus rent-free period plus optional renewal period if lessee is reasonably certain that the lessee will avail the option of renewal. If lessee is reasonably certain to exercise the option of renewal, plus optional termination period if lessee is reasonably certain not to exercise the renewal option. If lessee is reasonably certain not to exercise the renewal option, My dear friends, let's understand this quickly with the help of an example. For example, Monica is my another student. So Monica has taken a house on a lease basis for 5 years. Okay. And there is an optional renewal period of 2 years also, right? So what it is there, let me explain. So the first period is 5 years. Okay. 5 years is the lease period. And the another period is 2 years. 2 years is optional renewal period. Okay. And within the 5-year period, from the date of commencement, within the 5-year period, so first 3 months is a rent-free period. So when I have given the keys to Monica, so since she is my student, I have given her a rent-free period of 3 months, so that She got settled down in Delhi, okay, and she requested. So I told, okay, for the first 3 months I will not charge any rent, but subsequently I will charge, okay. So then, friends, the first 3 year was the lock-in period. First 3 year was the lock-in period, means non-cancelable period. Means 2 year 9 month. 2 year 9 month is a 2 year 9 month is a non-cancelable period, right? So the total period is 3 year. 3 year is a lock-in period. So 3 months is a rent-free period. 2 year 9 months is a non-cancelable period. And in this last 2 years, if Monica wants to terminate the contract, she can terminate the contract, right? So this is an optional termination period. This 2 year is the optional termination period. So friends, now let's see what will be the lease period. What will be the lease term? So lease term is equal to non-cancelable period, which is 2 year 9 months, plus rent-free period, which is 3 months, plus optional termination period if lessee is reasonably certain not to exercise the termination period, not to exercise the termination option, okay, not to exercise the option of termination. So Monica is very clear that in the next 3 years I will be able to clear the CA exam, and Monica comes from a very small town, okay. So she knows that there are no opportunity in her hometown. So she is very clear that I will clear the CA in from Delhi and I will continue doing a job here in Delhi. I will do the job in Delhi, okay. So Monica knows that, okay, so my rent is reasonable and I am at a safe place. So I will continue to live here. I'll continue here, okay. So she is reasonably certain that she is not going to exercise that optional termination. So she is not going to exercise the option of termination. Okay, right? And the last one is optional renewal period. So after 5 years, there is a option of renewal also for 2 years. So Monica is reasonably certain that I have to do job for a long time and I will continue to live at this place. If had the option given to me, I will avail the option. So Monica is reasonably certain to exercise the optional renewal period also, period of renewal also. She is ready to exercise. She is reasonably certain to exercise the option of renewal. So in this case, what is the lease period? Lease period is equal to rent-free period 3 months plus non-cancelable period 2 year 9 months plus optional termination period 2 years plus 2 year plus optional renewal period 2 year. So total period is 7 year. In this case, lease period is 7 year. Okay. So my dear friend, this is what we discussed. Then we discussed the lease payments. Okay. So the lease payment, again, very important. What is a lease payment from the lessee perspective? There are 5 lease payment. 1, 2, 3, 4, 5. From the lessor perspective, 5 plus 1. From the lessor perspective, all these 5 plus this one. Okay. This is the lease payment. Now, what is the lease payment? Lease payment is equal to fixed payment, including in substance fixed payment. Okay. So fixed payment, fixed rental plus if there is any escalation, that will be also counted. Fixed payment plus in substance fixed payment less any lease incentive, less any lease incentives. Okay. Less any lease incentive. For example, what is fixed payment? You all are aware. Lease incentive, if lessor is paying something to the lessee. In substance fixed payment, what is meant by in substance fixed payment? My dear friends, in substance fixed payment means, for example, a lessor has given a factory to the lessee, okay? And lessor has told that I will charge rental on the basis of production, okay? But even if there is no production, I will charge the rental on the basis of a minimum production of 1 lakh units. So while the rental is on the basis of production, but he says that doesn't matter whatever will be the production, even if it is a zero production, even if it is a nil production, I will charge for a minimum quantity of 1 lakh. I will charge for a minimum 1 lakh quantity. Okay. Minimum 1 lakh quantity I will charge. So friends, if I talk about this in substance fixed payment, tell me, while there is no fixed payment, but and the payment is on the basis of production, don't you think if he said that for minimum 1 lakh quantity, so I will charge for minimum 1 lakh quantity, I will charge, doesn't matter whatever will be the production. So in this case, this 1 lakh quantity multiplied by the rate per quantity will become the in substance fixed rental, right? So what is my lease payment? Lease payment is equal to fixed payment plus in substance fixed payment minus lease incentive plus variable lease payment which are dependent on an index or a rate. Variable lease payment which are dependent on an index or a rate, right? Not on the basis of output, not on the basis of turnover, which is dependent on the index or a rate. For example, wholesale price index, consumer price index, inflation index, okay? Plus exercise price of a purchase option. If the lessor has given a purchase option to the lessee, in that case, the lessor, if lessor has given a purchase option to the lessee and lessee is reasonably certain to exercise the purchase option, so in that case, exercise price will also become part of the lease payment. Penalties for terminating the lease. Penalties for terminating the lease. Okay. So terminating the lease. Penalties for terminating the lease. So friends, if lessee is reasonably certain that the lessee is going to terminate. For example, you remember in my full class, I have given the example of a strip of tablet, dawai ka patta, 10 tablet strips. Okay. Let me give you an example here. Penalties for terminating the lease. For example, a company is searching a place for opening its project office for 3 years. A company has got a contract in Shimla. Shimla is the capital of Himachal Pradesh. Company has got a contract in Shimla to open a project office for 3 years. That work has to be completed in 3 years. So company is exploring a rental space. Now, all the landlords are saying, so wherever the company wants to take the space, they are saying we will provide the space for a minimum period of 5 years, right? So the company is reasonably certain that I am going to terminate. Why? Because my project will get over in 3 years, and why should I continue for 5 years? So while when I'll terminate after 3 years, I have to pay the lease rental for 2 years also. But if I will continue to occupy this space, I will have a employee cost also, travel cost also. So better to terminate. So sitting on today, at the commencement date, the lessee is very much clear that the lessee is going to terminate the contract and lessee is going to pay the penalty. Or if there is any penalty clause which is inbuilt in the contract, so lessee is reasonably certain that he is going to terminate. So in that case, those penalty for terminating the lease will also be considered as a lease payment. And the last one is residual value guarantee given by the lessee. For example, the lessor is saying, I will charge 1 lakh rupee per annum lease rental for this car. The lessee is saying, no, sir, you are charging very high. Others are not charging this much amount. So lessor is saying, sir, the point is, when you return this car to me, the car will be in a very gadbad condition, right? The car will be in a very damaged kind of a condition, and I have to spend a lot of money for repair. The lessee is saying, sir, not to worry, I will keep your car in a very good condition. So lessor is saying, no, I don't have a trust on you. Then the lessee is saying, okay, sir, tell me one thing. Let's say if I'll use the car for 9 years, how much money you expect if one will keep the car in a very good condition, how much money you expect that you will get at the end of the life of the car? The lessor is saying, I am expecting 50,000 rupees. Okay. So lessee is saying, sir, tell me one thing. Even though if somebody will not keep the car in the good condition, what is the minimum amount which you will get from selling this car in a scrap? So lessor is saying, minimum I will get 30,000 rupees. So lessee is saying, okay, you are expecting 50,000 rupees, 30,000 rupees you will get from the market by selling this car as a scrap. I am giving you a guarantee of 20,000 rupees, right? So give me a market rent and I will give you a residual value guarantee of 50,000 rupees. 30,000 of course you will get, and the balance 20,000 I'm guaranteeing you. So this is a residual value guarantee, right? So what is a lease payment to the lessee? Lease payment to the lessee is fixed payment plus in substance fixed payment less lease incentive plus variable lease payment depending on index or rate plus exercise price plus penalties for termination plus residual value guarantee given by the lessee plus residual value guarantee given by any other to the lessor, any other party to the lessor. So that will be added when you are computing the lease payment from the perspective of the lessor. Okay. So this is what we discussed. Interest rate implicit in the lease, my dear friends, it is a discount rate. And my dear friends, in the question, if the question has given you interest rate implicit in the lease, which is lessor's rate, you have to use that rate. If lessor's discount rate, what lessor is earning, what lessor is charging, if that interest rate implicit in the lease is not given, then you have to use the incremental borrowing rate. First, you need to use the IRR. If IRR is not available, then you have to go for the IBR. IRR is lessor IRR, IBR is lessee's IBR. Okay, so this is the priority. Initial direct cost, for example, any cost which is incurred for getting into the lease contract. For example, you have to pay a brokerage or commission to the property dealer. When you will pay a brokerage or commission? When you will finalize the lease contract, when you get the space, when you get the flat, right? Only then you will pay the brokerage or commission, right? So any additional cost which is incurred by getting entered into the lease contract is considered as an initial direct cost. Okay, right? So then friends, we discuss the initial recognition. So the lease contract has to be capitalized as a right of use asset to lease liability. So ROU to lease liability, and ROU is equal to what? ROU is equal to present value of the future lease payment, present value of the future lease payments plus present value of future lease payments plus. So future means after commencement date. Sir, what happen if a lessee has paid prior to commencement date in advance or at the commencement date? For example, NHPC Limited. NHPC Limited has taken a land from the government for 50 years and the lease rental per annum is 1 crore. So the total rental is 50 crore, the gross value. So NHPC has paid a upfront payment. NHPC has paid a upfront lease payment on the commencement date, upfront lease payment of 20 crore and settle the entire lease payment for the lifetime. So NHPC Limited has paid 20 crore rupees upfront on the commencement date, and now this NHPC is not going to pay anything to the government as a lessor. Now NHPC is doing the accounting of this 20 crore. Friends, tell me, in this case, what is my ROU and what is my lease liability? First of all, tell me, is there any lease liability sitting on the commencement date? Answer is no. You have already crystallized your lease liability. You have paid your lease liability. But sir, whatever money we have paid, what is the accounting of that? The money which we have paid on the commencement date. ROU to bank, 20 crore. Okay, ROU to bank 20 crore. Right? So it has to be capitalized as a ROU asset. And this 20 crore has to be depreciated over 50 year, and every year you have to charge depreciation of 40 lakh rupee. Yes, 40 lakh rupee. Okay. Is that clear, my dear friends? So ROU is equal to present value of future lease payment plus advance payment, any payment made on or before commencement date, plus initial direct cost plus cost of dismantling, asset retirement obligation cost, decommissioning cost. Okay. So these four are the total of ROU. Any payment which you have to made in future, you have to discount it. Okay. Any payment you have made in past, I mean to say advance, or on the commencement date, you have to take a full value because the present value of 100 rupee today is 100 rupee only. Plus initial direct cost plus asset retirement obligation. Okay. Exemption to the lessee, my dear friends, don't you think this is a very cumbersome task, right? For every lease contract, I was working in Indus Towers Limited and they have the 4 lakh lease contract. Earlier the life was very simple. Whatever we were paying, we were charging as a rent expense to bank, right? Every month. But now on the commencement date, you have to do the accounting for the entire lifetime of the lease contract. Okay. Then you have to charge depreciation, you have to charge interest cost. So friends, there was an exemption which is given, right? So there are two exemptions, short-term lease exemption and low value lease exemption. What is a short-term lease exemption? Any lease for 12 months or less, any lease for 12 months or less, any lease contract which is up to 12 months, right? Either less than 12 months or for 12 months has to be capitalized. Sorry. So any lease contract which is 12 months or less, so entity can avail the short-term lease exemption. For example, an entity has entered into a lease contract in Mumbai for 7 months. So in this case, the entity can avail the short-term lease exemption. Sir, what is a short-term lease exemption? So in the short-term lease exemption, what is the benefit of it? So if it is a short-term lease, if the entity is availing this exemption, the entity is not going to capitalize right of use asset and lease liability. So entity has to do the normal accounting, expense account debit to bank, rent expense to bank. Okay. Sir, is it mandatory? Any lease contract which is for 12 months or less, is it mandatory to apply, avail short-term lease exemption? Answer is no, it is optional. It is an optional exemption. It is not the mandatory exemption. It is optional exemption. It is optional exemption. Okay. So which is lease term of 12 months or less. A lease that contains a purchase option is not a short-term lease. A lease that contains a purchase option is not a short-term lease. For example, an entity has entered into a lease contract for taking a machine on a lease basis for 11 months. At the end of the lease period, the lessor has given an option. Of course, lessor has given an option in the beginning only. So at the end of the lease period, there is an option to purchase that machine. So if there is a purchase option inbuilt in the lease contract, doesn't matter, the period is 12 months or less, it will not be eligible for the short-term lease exemption, right? And the short-term lease exemption has to be availed by the class of underlying asset. By the class of underlying asset. What is meant by the class of underlying asset? For example, the lessee has entered into a lease contract for 3 buildings, B1, B2, B3. B1 is in Mumbai and B1 lease is for 7 months. Sorry. B1 is for 7 months. B2 is for 11 months. B3 is for 12 months. The lessee wants to apply short-term lease exemption for B1 and B2, but don't want to apply this short-term lease exemption for B3. Lessee wants to do the ROU and lease liability accounting for B3. Can lessee do so? Answer is no. Lessee has to apply. If lessee is applying a short-term lease exemption, lessee has to apply this short-term lease exemption on all the 3 leases. On all the 3 leases. Okay. Is that clear? In all the 3 leases. Okay. Yes. Friends, the another one is low value lease exemption. Low value lease exemption means the lease contract of an item which is of a low value. For example, lessee enters into a lease contract for mobile, photocopy, tea and coffee vending machine, Xerox photocopy machine, printer, okay, laptop, computer. So lessee enters into a contract for these small assets. Okay. So in this case, if the item is of a low value, then the lessee can take a low value lease exemption. Okay. And it can go contract by contract. If that contract is a low value contract, right? Low value contract, not from the rental perspective, from the value of the identified asset perspective. Okay. The lessee can avail that exemption, and instead of doing a right of use asset and lease liability accounting, lessee has to do the rent expense to bank accounting. Sir, the lessee has entered into a contract for a printer, right? Contract for a printer for 3 years. Can lessee avail the low value lease exemption? Yes. So the period is only relevant for short-term lease exemption, right? The period is not relevant for low value lease exemption. In low value lease exemption, item is relevant. Item is relevant, right? Identified asset is relevant. Okay, is that clear? So the item is relevant. For example, there is a property contract. Can a property can be of a low value? Answer is no. So a lessee has entered into a contract of 11 months for a property. Can lessee avail short-term lease exemption? Answer is yes. Can lessee avail low value lease exemption? Answer is no. Okay. So this is what it is. So friends, then we discussed the subsequent measurement. Subsequent measurement, ROU is going to be depreciated. So ROU has to be depreciated over a straight line method. The depreciation period is equal to, right, is equal to useful life of the asset if lessee wants to purchase the asset, or it is earlier of the period of usage and the lease period in case where the lessee does not want to purchase the asset. Okay. And lessee has to apply the provisions of Ind AS 16 for the purpose of subsequent measurement like cost model, revaluation model, etc., etc. And this lease liability has to be increased by the interest cost and decreased by the lease payments. Okay. So friends, this is what we discussed, right? And now, yes, this is what we discussed, friends. And talking about the separation of a lease contract, I will come back with a question, right? And then we'll discuss modification also along with the question. And then we'll quickly cover the concept of sublease and the sale and lease back transaction. Okay. And the lessor accounting, I'm not covering in detail. Lessor accounting, lessor accounting is the same accounting which you guys have read in accounting standard 19 also, right? So now, my dear friends, let's quickly do some questions. Can we do some questions? Yeah. Okay, let's do some question. Yes, friends, let's discuss question number 1 first. Okay. Feel Fresh Limited, the company, is into manufacturing and retailing of FMCG products listed on stock exchanges in India. One of its product is bathing shop, which the company sells under the brand name Feel Fresh. Under the brand name Feel Fresh. Okay. The company does not have its own manufacturing facilities for soap, and therefore it enters into arrangement with a third party to procure the shops. So this company Feel Fresh Limited, this company is into manufacturing and retailing, and one of the product is bathing soap, which the company sells under the brand name Feel Fresh. The company does not have its own manufacturing facilities, and therefore it entered into a arrangement with a third party to procure. Okay. So entity is not doing the manufacturing, entity is procuring from somebody else. Okay. The company entered into a long-term purchase contract of 10 years with Messrs. Radhe. The company entered into a long-term purchase contract. See, this question is digressing you. When this question will come in exam, you will think that, oh, is it a normal sale purchase contract? Right? No, you don't need to conclude it at the first instance. Okay. So the company entered into a long-term purchase contract of 10 years with Mrs. Radhe, Mrs. Radhe. So Mrs. Radhe is the supplier and Feel Fresh, this company is a buyer. Okay. So in Ind AS 116, you will find the word lessor, supplier, right, at a lot of places. Instead of lessor, you will find the word supplier. You will find the word supplier. Okay. You will find the word supplier, right? You will find the word supplier. So friends, Mrs. Radhe is the supplier and Feel Fresh is the buyer. Okay. Following are the relevant terms of the contract with Messrs. Radhe. Messrs. Radhe has to purchase a machine costing rupees 10 lakh from the supplier. Messrs. Radhe has to purchase. The supplier has to purchase a machine costing rupees 10 lakh from the supplier as specified by the company. So Feel Fresh is telling Messrs. Radhe that Messrs. Radhe, can you please purchase this machine from XYZ vendor for manufacturing the shops and giving it to me? So who is giving the instruction? This company Fieldfresh is giving the instruction that you have to purchase this machine. Okay. The machine will be customized to produce the soaps as designed by the company. Okay. So the machine which is purchased by Mr. Radhe, so this machine has to be customized in a way that this machine will produce the soaps which is designed by the Fieldfresh company, right? So who is controlling? This company is controlling. This company has given the direction that you have to purchase the machine from him to manufacture and give the soaps to me. And this machine is also customized so that this machine will manufacture the soaps which is needed by me only, means Fieldfresh company. This machine cannot be used by Messrs. Radhe to produce the soaps for buyers other than the company due to the design specification. So there is no alternate use of this machine to Messrs. Radhe. Means this machine is dedicated for the purpose of Fieldfresh company, right? So whatever is the benefit from this machine, this benefit will go to the Messrs. Radhe only. The entire product will go to Fieldfresh company only. Okay. The machine has a useful life of 10 years. The contract is also 10 years. And the straight line method of the depreciation is best suited considering the use of the machine. Right? Sir, after reading this paragraph, it seems like it is going into a lease contract. So while the machine is purchased by Messrs. Radhe, but this machine is dedicated for the purpose of Fieldfresh company only. Seems like this machine has been leased to Fieldfresh company, where entire output belongs to Fieldfresh company, and how to use, for what purpose it is going to be used, it is controlled by, the right to control the use is also controlled by lessee. Lessee means Fieldfresh company. The company will buy, the company will pay. Now the arrangement, the commercial arrangement is, the company will pay 4 rupees 75 paisa per shop for the first year of the contract. This is calculated based on the budgeted annual purchase of 7 lakh shops as follows. Variable cost of manufacturing is 4 rupee. Cost of machine is 25 paisa, right? And 50 paisa is margin, and per soap cost is 4 rupees 75 paisa. Okay. In case the company purchases more than 7 lakh, that is budgeted number of soaps, the soaps in the first year, then the cost of the machine 25 paisa per shop will not be paid for soaps procured in excess of 7 lakh units. So this machine, what is the identified asset? What is the asset in this entire arrangement? Machine, not the shops. Shops are inventory, na? Right? These shops are inventory. What is the asset? Asset is machine. So this Fieldfresh company lessee is getting a right to control the use of this machine. It is only for the purpose of Fieldfresh company. This machine is an identified asset also. Okay. And commercially, what it is saying that if the company will purchase more than 7 lakh quantity, the company is not required to pay this 25 paisa per shop. The company is not required to pay. Means the company has to pay only up to 7 lakh quantity. However, in case company procure less than budgeted number of shops, then the company will pay the differential unabsorbed cost of the machine at the end of the year. For example, if the company purchases only 6 lakh shops in the first year, then differential amount of 24,015 rupee, which is 1,74,015 minus 6 lakh multiplied by 0.25, will be paid by the company to Mr. Radhe at the end of the year. Variable cost will be actualized at the end of the year. One thing is very clear. This company, this lessee, Fieldfresh company, has to pay a minimum rent on the basis of 7 lakh quantity. 7 lakh multiplied by 25 paisa, right? Which comes out at 1,74,015 rupees. 1,74,015 rupee. Okay. 1,74,015 rupee. Right? Is that clear? Is that clear? Yeah. Is that clear, guys? Okay. Right. So in substance fixed payment, this is a variable cost and this is his margin. So what is the cost of identified asset? The cost of the identified asset is 1,74,015 minimum in substance fixed payment. the cost per shop will be calculated for each year in advance based on the budgeted number of shops to be produced each year. An amount of 1,74,015 shall be considered each year for the cost of machine for the year 1 to year 8 while calculating the cost per shop. 1,74,015 has been considered. Any differential under absorbed amount shall be paid by the company to Messrs. Radhe at the end of that year. At the end of that year, okay? A charge of 1,74,015 per annum for the machine is derived using borrowing cost of 8% per annum. See, the lease payment in substance fixed payment they have given you 1,74,015 and discount rate they have given you 8%, and for year 9 and 10 only variable cost and margins will be paid. Means the lease payment, this is a rent free period, the lease payment is not required to be made, and the year 9 and 10 only variable cost and margin needs to be paid, okay, which is not a lease arrangement, okay. Messrs. Radhe does not have any right to terminate the contract, but the company has the right to terminate the contract. The lessee has the right to terminate the contract, okay. However, if the company terminate the contract, it has to compensate Messrs. Radhe for any absorbed cost of the machine. It means your 8 year is a non-cancelable period and the last 2 year is a termination period. 8 साल का तो देना ही है ना, बिकॉज लीज पेमेंट का पीरियड ही वही है, ओके. फॉर एग्जाम्पल, if the company terminate the contract at the end of the second year, then it has to pay this much amount, which is 1,74,015 multiplied by remaining period 6 year, not 8 year, 6 year, right? Because total payment period is 8 year only, okay. If it terminate the contract after the 8th year, then company does not have to pay the compensation since the cost of the machine would have been absorbed. In the first year, the company purchases 5,50,000 shops at 4,75 paisa per shop. Doesn't matter. Even though if it is 5,50,000 shops, the company has to pay the in substance fixed payment for 7 lakh shops, which is 1,74,015. Evaluate the contract of the company with Messrs. Radhe and provide necessary accounting entries for the first year in accordance with Ind AS, assuming all cash flows occurs at the end of the year. Very, very important. My dear friends, if I classify the commonly found error in the examination, the most typical error, the 10% of the error belongs to the end of the year or the beginning of the year. Normally, you as a student, while you all are chartered accountant, manifest it. You all are chartered accountant, please manifest it. Friends, you all are chartered accountant, and you know what is, as a student, what is instilled in your brain, that normally lease payment has to paid at the end of the year only. And in the exam, the question will ask, the payment has been made at the beginning of the year, and your entire calculation will get wrong, right? Your entire calculation will get wrong, okay, will get wrong. Friends, if I talk about this thing, what is the difference between beginning of the year and end of the year? For example, a company has entered into a 5-year lease contract. 1 lakh rupee is the lease payment, and it is paid at the beginning of every year. For the first payment, and discount rate is 10%. For the first payment, what is the discount rate? What is the present value factor? The present value factor is 1 if the payment is made at the beginning of the year. If payment is made at the end of the year, for the first payment, the present value factor is 1 divided by 1.1, which is 0.909. Okay. So this is the difference in the beginning of the year, end of the year. So friends, first of all, the standard says that you need to evaluate this contract. Is it a purchase sale contract or is it a lease contract along with the purchase contract? Okay. So it's a lease contract. Why? Identified asset is there. What is identified asset? This company entered into a long-term purchase contract with the lessor, right, to purchase a particular type and quality of shops for 10-year period. And this machine is an identified asset. Machine, okay. Machine is an identified asset which is customized as per the lessee and which does not have an alternative use. Right to obtain substantially all the economic benefit belongs to the lessee. Right to direct the use lying with the lessee, okay. right? So lease term is 10 years, but 8 year is the payment period. 8% is the discount rate. Now, what is the right of use asset and lease liability? Can we solve this question? Number one. Okay, let's solve this question number one, my dear friends. Let's solve this question number one. Just a minute. Let me open my Excel file. I hope my Excel file is visible to everyone. Is it visible now? Question number one. Question number one of the word file. Okay. So in substance, fixed payment is how much? 7 lakh quantity multiply by 0.25. And even in the question, this 1,74,015. So let me write 1,74,015, which is given in the question. Okay. 1,74,015. Now, since it is, and what is the lease period? Lease period is 10 years. Payment period is 1 to 8 years. Payment period is 1 to 8 years. Okay. Right. Discount rate. What is the discount rate? 8%. 8% is the discount rate. Okay. Now let's compute ROU and lease liability. Let's compute the lease liability. Year, amount, present value factor, present value. 1, 10 years. Amount is 1,74,015 rupee. Amount is 1,74,015 for entire 10 years or only 8 years? Only for 8 years, right? And it is 0 in the 9th year and 10th year. What is my discount rate? Equal to 1 divided by 1.08. Okay. Divide by 1.08. So on and so forth. Right. What is my present value? This multiply by this. Okay. Right. What is my present value of the future lease payments? It is 10 lakh rupee and it was the cost of the machine also, right? This is my present value of future lease payments. Okay. Now what is the accounting entry? Right of use asset account debit to lease liability Okay. It is 10 lakh rupee. Okay. So this will be the accounting entry being ROU asset and lease liability recognized at the commencement date. Okay. Now let's draft the lease payment schedule. Okay. So this is a ROU. This is a ROU calculation. Now ROU calculation. Just a minute. This is a ROU and lease liability calculation. Okay. Now your lease liability schedule. Let's prepare lease liability schedule. Okay. So lease liability schedule. Year opening balance, interest, right? Payment, closing balance. Closing balance. What is my opening balance? What is my opening balance of lease liability? 10 lakh rupee. What is my interest at the rate of 8%? Interest at the rate of 8%. Okay. What is my payment? My payment is 1,74,015. What is my closing balance? My closing balance is sum of all these three. Okay. This will become my opening balance in the second year. I will pay interest on this amount. I will pay 174,015. This is my closing balance. So on and so forth. If I drag this entire calculation for this next 10 years, you can find at the end of the 8th year, my lease liability becomes zero, right? My lease liability becomes zero. And what is my impact in the P&L? What is my impact in the P&L? Impact in the P&L. Impact in the statement of profit and loss. Impact in the statement of profit and loss, right? What will come in my P&L with respect to this lease contract? Depreciation on ROU, right? And interest on lease liability. On lease liability, okay? What is my depreciation on ROU, my dear friends? Will I depreciate this ROU? I will use the machine for 10 years. I will procure the shops for 10 years, right? While the payment period is 8 years only. So my depreciation of ROU will be for 10 years or will be for 8 years? My ROU depreciation will be for 10 years or will be for 8 years? My ROU depreciation will be for 10 years or will be for 8 years? Will be for 10 years. You will use the machine for 10 years, right? While you are not paying for it. You are only paying for the shops. क्योंकि वो 10 लाख तो पूरा रिकवर हो ही गया ना. आपने देखा प्रेजेंट वैल्यू 10 लाख है ना, कॉस्ट ऑफ मशीन भी 10 लाख है, मार्जिन उसका अलग है, वेरिएबल कॉस्ट अलग है. व्हाट इज माय इंटरेस्ट ऑन लीज लायबिलिटी? दिस वन इज इंटरेस्ट ऑन लीज लायबिलिटी. Sorry. Yes, it is 1 lakh. So your ROU will be depreciated 10 lakh rupee, and the difference between the total payment and the present value of the lease payment, which is interest, is 392,119. What is your total expense? Your total expense is 1392,120. 1392,120. Okay, this is your total expense, right? In addition to this, in addition to this, 4 rupees 75 paisa you are paying per shops, right? But 25 paisa belongs to what? 25 paisa belongs to 25. If you see, 25 paisa belongs to the cost of the machine. But otherwise, this variable cost and margin, 4 rupee 50 paisa you have to pay per shop, which you procure, right? Right. So that will also go to the P&L. Is that clear, my dear friends? Is that clear? Yeah. I hope it is clear to all of you. Yes. So this is the accounting which is given, which I have already shown you. ROU asset to lease liability, interest to lease liability, depreciation. See, the depreciation is not 10 lakh divided by 8, 10 lakh divided by 10. Okay. Divide by 10. Then lease liability to bank. Okay. So this is the cost of shop. In the first year, they have purchased 5,50,000. Okay. So while for the machine, for the machine, the cost is minimum in substance fixed payment is for 7 lakh shops, but for variable cost in the margin, it has to be paid for 5,50,000 units. So 5,50,000 multiplied by 4.5. So this is cost of shops to bank. Okay. This is the accounting which is there. I hope you have enjoyed this question number 1. Okay. Let's go to the question number 2. Okay. And let me cover it in my Excel only. Okay. So this is my impact in the P&L. Now, what else will go? So the cost of shop, that is variable cost plus margin to Messrs Radhe, right, will also become part of cost of sales in P&L, right? Means whenever this field fresh will sell the shops, then it will become, otherwise it will become an inventory, right? It will become an inventory. Okay. So what is the accounting entry? Accounting entry is inventory account debit, inventory stop account debit, right, to bank. And in the first year, how much shop was purchased in the first year? 5,50,000 multiply by 4.5. Okay. Being 5,50,000 quantity purchased in the first year. Okay. So when these shops will be sold, inventory will be transferred to cost of goods sold, in P&L. Okay. In P&L, cost of goods sold in P&L. Okay. What will be the accounting entry? Cost of sales to inventory. Now, my dear friends, let me take you to the next question. Yes. Question number 4. So let me give the name of question number 1 so that when I'll share this file, you will be able to understand that. Yes. Evaluation of a purchase contract. So evaluation of a contract, if it contains a lease. Evaluation of a contract if it contains a lease. Okay. If it contains a lease. Then question number 4. Separation of a lease and non-lease component. Question number 4. This question number 4 is on separation of a lease and non-lease contract. Okay. So let me read the question first, then I'll cover the concept and then I'll solve this question. Entity X, a lessee, entered into a lease contract with entity Y, a lessor. Y is lessor, X is lessee, to lease an entire floor of a shopping mall for a period of 9 years. So lease period is 9 years and this contract is for a shopping mall. The annual lease rental of 70,000 is payable at year end, not beginning, end. So annual lease rental is 70,000. To carry out its operation smoothly, entity X simultaneously entered into another agreement, facility agreement. So guys, you are paying, when you are living in a rental accommodation, you are paying a rent and you are also paying for electricity, water, maintenance. Like I am living in a society, high-rise society. So I am paying a rent and I'm also paying a maintenance, right? So one is right of use of an asset. So one is a asset usage agreement. Another one is services usage agreement. Services usage agreement, right? So in addition to this property lease contract, this entity has entered into a lease contract for facility arrangement also, like passenger lift, DG set, power supply, parking space, which are specifically mentioned in the agreement for annual service charges amounting to rupees 1 lakh, right? So 70,000 is lease rent, 1 lakh rupee is facility charges. As per the agreement, the ownership of the facility shall remain with the lessor. Lessee's incremental borrowing rate is given 10%. So question has given you this first paragraph. Then question says that the facility agreement clearly specifies that it shall be coexistent, and coterminous with lease agreement. The facilities agreement clearly specifies that it shall be coexistent and coterminous with lease agreement. The facility agreement shall stand terminated automatically on termination or expiry of lease agreement. Sir, what is meant by coexistent and coterminous? इतनी ऑक्सफोर्ड की इंग्लिश, right? So friends, if I read this paragraph, what I can gaze out, right? It is saying that this contract will go hand in hand. This contract will go hand in hand. This contract will go hand in hand. Means, so if this property space agreement will be terminated, this agreement of facility will automatically get terminated. Means it is just like a combined contract. Okay. Entity X has assessed that standalone price of lease agreement is 1,20,000 per year and standalone price of the facility agreement is 80,000 per year. Right. Sir, what does it mean? So the contract is saying 70,000 is a lease agreement charges for the property. 70,000 is the property agreement charges and 1 lakh rupee is the facility agreement charges. And 1 lakh rupee is the facility agreement charges. Okay. 1 lakh rupee is the facility agreement charges. Right. This is what? This is what? Yes. Yeah. So 70,000 they are paying for the property and 1 lakh they are paying for the facility arrangement. But the market value, the fair value of the property lease agreement is 1,20,000. Property agreement is 1,20,000 and the facility agreement is 80,000. And the facility agreement is 80,000. Okay. Just a minute, guys. Just a minute. Yeah. Yes. And standalone price of the facility agreement is 80,000 rupees per year. Okay. Entity X has not elected to apply the practical expedient in paragraph 15 of Ind AS 116. Sir, I don't remember paragraph Ind AS 15 of 116. You are not required to remember. You are required to remember the concept. So entity X has not elected to apply the practical expedient of not to separate non-lease component from lease component. Accordingly, it separates non-lease component from the lease component. How will entity X account for lease liability on the commencement date? Friends, now there is a concept of separation of a lease and non-lease component in Ind AS 116. What Ind AS 116 says that? Ind AS 116 says that in a lease contract at times, there are non-lease component also. For example, I have entered into a contract with a lessor and lessor is charging 1 lakh rupee lease rental from me. Lessor is charging 1 lakh lease rental from me. And in this 1 lakh lease rental, 90,000 rupee is my rent for using the flat. 10,000 rupee is my amount for using the facility, the maintenance charges. 10,000 rupees maintenance charges, which includes the sweeper charges, cleaning charges, security guard charges, park usage charges, parking charges. So this 10,000 is a service charges. Guys, am I paying rupees 10,000 for service or for an asset? I am giving 10,000 for a service, right? And this 90,000 rupees I am giving for using the property on a rental basis, right? So my lease component, now what will be the accounting? For the lease component, what I'll do? 90,000 rupee, which is my lease component, I will do the right of use asset and lease liability accounting. And 10,000 rupee, which is a maintenance contract, I will record the expense accounting, maintenance expense account debit to bank 10,000 rupees every month or per annum, for example, right? So there will be two accounting, one lease accounting for the lease part and a normal accrual of expense accounting for the non-lease part, okay, for the non-lease component. So my dear friends, so one thing is very clear. For lease component, you have to do Ind AS 116 accounting. For non-lease component, you have to do the maintenance accounting, right? Or expense accounting, okay? Now, see, in my society, what happens? Let me tell you. The lessor says to the lessee, see, 10,000 is the maintenance charges and 60,000 rupees is the charge for my flat. So you can do two things. One, you can pay me 60,000 rupees and you will bear the maintenance expense which you will pay directly to the society RWA, right? Resident Welfare Association of the society. That is one. Number two, you have to pay me 70,000 rupees and I will settle them. I will pay 10,000 rupees to them, right? So lessee is saying, sir, can we do one thing? Can we enter into an agreement? I will pay you 70,000, but you have to write that I am paying 40,000 rupees for rent and 30,000 rupees for maintenance. So the lessor is saying, I don't have any problem till the time you are paying me 70,000 rupees, I don't have any problem, right? So this is only a breakup. Just get the breakup in whatever way you want. 40,000, 30,000, I am okay. But friends, what is the downside of it? Now, why lessee is planning a lower lease rental and a higher maintenance expenses? Probably lessee wants to record the higher expenses in the initial years, right? For example, the lessee will record this maintenance expense to bank 30,000 rupees and lessee will record for 40,000 rupees, lessee will do the ROU to lease liability accounting and depreciation and interest cost will follow. So the standard setter understood it. They said, this can be a problem where people will plan. So you know what they said? They said, whatever total consideration the lessee is paying to the lessor. In this case, what is the total consideration lessee is paying to the lessor? What is the total consideration lessee is paying to the lessor? The total consideration. What is the total consideration lessee is paying to the lessor? 70,000 for lease rental and 1 lakh rupee for the service agreement, right? 1,70,000 is the total amount the lessee is paying to the lessor. So whatever is the total consideration lessee is paying to the lessor, it has to be allocated in the ratio of the standalone selling price, in the ratio of the fair value of those lease and non-lease component, right? So my dear friends, question number 4 of word file. I hope my Excel file is visible to all of you. question number 4 of word file. If you see this, my dear friends, consideration paid. Consideration paid. Okay. How much is the consideration paid? How much is the consideration paid? On account of lease, on account of service. 70,000, 1 lakh. 1,70,000 total. Total consideration is 1,70,000. Okay. Total consideration is 1,70,000. Okay. Is that clear, my dear friends? Is that clear? 1,70,000 is the total consideration. Now, the total payment has to be allocated in the ratio of lease and non-lease component. Sorry, in the ratio of fair value oblique standalone. You guys know standalone selling price. You already have covered Ind AS 1 and 5. It is market value, fair value of lease and non-lease component. Now, what is the fair value of the lease and non-lease component? So lease service. What is my standalone selling price? 1,20,000. The question is saying for the lease component, 80,000 for non-lease component. Ulta, right? Ulta. So friends, now allocation of lease and non-lease component. So what is the amount which I'm paying? 1,70,000 multiply by 120 divided by 2 lakh. 1,70,000 multiply by 80,000 divided by 2 lakh. Right. So friends, what is the accounting? So, and what is the lease period? What is the lease period in this case? What was the lease period? You remember the lease period? The lease period was 9 years. The lease period was 9 years. Discount rate was 10%. Lease period is 9 years. Discount rate is 10%, right? So this 1,02,000 will be used for ROU and lease liability accounting, right? This 68,000 will be charged to expense in P&L, right? On an annual basis. Now, the demand of the question is, what is the lease liability on the commencement date? What is the lease liability on the commencement date, right? Calculation of present value of lease rentals, right? Calculation of present value of future lease rentals. Let me copy this table. Let me copy this table. And let me delete it. What is the amount, guys? What is the amount? The amount is what? 1,02,000, right? 1,02,000. This is the amount. 1,02,000. What is my present value factor at the rate of 10%? It is end of the year. 1 divided by 1.1, right? Divide by 1.1. What is my present value? Okay. What is my lease liability? 587,420. So what will be the accounting entry? ROU asset account debit ROU asset account debit to lease liability. ROU asset account debit to lease liability. Right? Then your this ROU will be depreciated. And what will go to the P&L? Depreciation to accumulated depreciation or ROU asset, right? This will be the another entry. What you will do, like in the first year, this divide by 9 because 9 year is the lease period. Okay. Then your maintenance, your maintenance service expense debit to bank, right? What is the amount? 68,000. Okay. And of course, this lease liability, then interest has to be charged. Then you have to draft a lease liability schedule. Interest expense account debit, interest expense account debit to lease liability. This I need to compute, right? But what will be the interest expense in the first year? This I can compute now. So lease liability is this much. 10% is the interest rate. So first year का तो मेरे को पता है. Second year calculate करना पड़ेगा after making a payment of the lease liability, right? Then the next entry, lease liability account debit to bank. Lease liability account debit to bank 1,02,000. These are the accounting entries which are going to be passed with respect to this lease and non-lease component question. Now, sir, we understood that in case of lease and non-lease component, it has to be splitted between the in the ratio of their fair value. Sir, in the question it is talking about some practical expedient. Sir, what is this practical expedient? Friends, there is a concept given in, there is an exemption given in Ind AS 116 which says that if you don't want to split lease and non-lease component, don't do. And consider the entire amount as a lease component and account for as a Ind AS 116, right? So that you will not be able to plan at least. Okay. So standard has given you a choice. If you don't want to split, don't do that. At times there could be a scenario where you are not able to determine the fair value of the lease part and the fair value of the service part. So standard allows you, you can whatever you are paying in total, even though if it is mentioned in the contract, still you can take a practical expedient, right? And you can whatever money you are paying to the lessor, you can consider that as a lease payment, okay? And apply the Ind AS 116 accounting. My dear friends, it's 8:35 now. Let's have a break and we'll start at 8:47. Okay? Yeah. Break start. So friends, with the help of this question, we have also discussed, understand the concept of separation of a lease and non-lease component, right? So we have gone through in the last question, we have gone through with the evaluation of a lease contract, evaluation of a contract, whether it contains a lease. Moving further, let's discuss this question number 5, a very important question, right? So entity X is an Indian entity whose functional currency is INR. This question involves two standards, Ind AS 116 and Ind AS 21. So leases and foreign exchange. Entity X is an Indian entity whose functional currency is INR. It has taken a plant on lease from entity Y for 5 years to use in its manufacturing process. So X is a lessee and Y is a lessor. And X has imported a machinery on lease from entity Y for 5 years. So lease period is 5 years, okay? For which it has to pay sorry. Yeah. So lease period is 5 years, right? For which it has to pay annual rental in arrears and annual rental in arrears. What is meant by annual rental in arrears? Means at the end, right? If it has been written as pay annual rental in advance, means beginning, okay? So the rental are given in US dollar, 10,000 US dollar every year, but the functional currency is INR, okay? On the commencement date, when you have to do the ROU to lease liability accounting, on the commencement date, exchange rate was 68 rupee per US dollar, right? So now this rate has reached to 96, okay? But this is the question, you have to rely on the question, right? At times, there are people who are over smart. The question will tell you $1 is equal to 45 rupee. And you will say, no, 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 $1 is 96 rupee. So the question is not asking your general knowledge. The question is asking your FR knowledge, right? So there is a difference between general knowledge and FR knowledge. So general knowledge, if you are sitting in an IAS exam, then you have to write. It is not 45, it is 96. But when you are sitting in a FR exam, CA exam, you have whatever question is saying, question is the supreme, okay? So on the commencement date, exchange rate was 68 rupee per US dollar. The average rate for year 1 was 69. So commencement date rate was 68, average rate for full year was 69 and closing rate is 70, 68, 69, 70. The incremental borrowing rate of entity X, the incremental borrowing rate of entity X on commencement of the lease for a USD borrowing was 5% per annum. This rate of USD borrowing is also given, right? How will entity X measure the right of use asset and lease liability initially and at the end of year 1? Initially and at the end of year 1. कैसे measure करेंगे? कैसे measure करेगी ये entity? बताओ. What this question is asking, guys? What this question is asking? The main part of this question, if I talk about the main part of this question is, it is talking about the main part of the question is this leases are into US dollar. This leases are into US dollar, right? This is the part of the question. Now, what information we have? What information we have? We have some information that the end of the year rental is $10,000. Then the question has given you lease period 5 years. The question has given you exchange rate. And the question has given you the discount rate also, right? Discount rate also. The question has given you the discount rate. Okay. So my dear friends, let's solve this question. The ask of the question is, how will entity X measure the ROU asset and lease liability initially and at the end of year 1? Initially and at the end of year 1. This is the question. This is the question, my dear friends. Okay. This is the question. To solve these kind of question, what should I do? To solve these kind of question, what should I do? first of all, I have to do all the computation in US dollar, right? I hope my Excel is visible to everyone. Is it visible? Yes. Question number 5 of Word file. First of all, you need to compute the present value. You need to compute the present value in US dollar. How much dollar you are paying every year? 10,000 for 5 years. What is your discount rate? 5%. What is your present value factor? 1 divided by 1.05. Okay. This again divide by 1.05. Okay. This is your present value factor. What is the present value? This multiply by this. So present value of $50,000. Present value of $50,000 is 43,295. Okay. What was the exchange rate on the commencement date which was given? 68 rupee. Okay. So what is my present value of the liability? What is my present value of the lease liability in INR? 29,44,044. So what accounting entry I will pass? ROU to lease liability in INR, ROU to lease liability, okay, in INR. Okay. So my first question was, what will be my ROU and lease liability at the commencement date and at the end of the year? At the end of the year also. Now I need to compute my lease liability schedule also, right? So friends, what is my opening balance of the lease liability? 43,295. What is my interest cost in dollars? This entire calculation is in dollar. Multiply by 5%. Payment I am making is 10,000 rupee. Closing balance, sum of all these three, right? This will become the opening balance. This is your interest, payment and other aspect. So drag it for 5 years, you will find it becomes 0. So So you have to compute the closing balance at the end of the first year for ROU and lease liability. So what is the carrying amount of ROU? What is the closing balance of ROU? What is the closing balance of ROU? Gross block minus depreciation. Then I need to pass a depreciation. What is my depreciation, friends? What is my depreciation? My depreciation is ROU asset divided by 5 year. 5,88,809. Now I need to charge. Should I do anything for ROU? No, ROU is a non-monetary asset. We have computed ROU at the exchange rate on the commencement date. We have computed ROU and we charge depreciation. And my closing balance is this minus this. My closing balance is this minus this. Okay, 23,55235. This is my closing balance of ROU at the end of year 1. Okay. Yes. Now I need to charge interest on lease liability. What is my interest on lease liability? My interest on lease liability, which is $2,165, $2,165 to lease liability. Okay. This interest on lease liability, this is in dollar. This has to be converted as per Ind AS 21. This has to be converted at the average rate. The PNL has to be converted at the average rate or the rate on the date of the transaction. Average rate or the rate on the date of the transaction. So we'll apply average rate here, multiply by 69. So this will be my interest expense. Now I will pay the lease liability. What is my lease liability? My lease liability is how much? $10,000 I am paying, multiply by I am paying at the end of the year. That day the rate is 77 lakh rupee lease liability I am paying. 7 lakh rupee lease liability I am paying, my dear friends, right? Any doubt, any gila shikwa, any problem, any question so far? Any problem? Yeah, any problem? Yeah. So now tell me, what is my closing balance of lease liability? This lease liability is a monetary item, monetary asset, monetary liability, monetary item. What is my closing balance of lease liability? 35460, right? So my ROU and lease liability balances. My ROU and lease liability balances. Okay, ROU, lease liability. Commencement date, then your end closing balance. Closing balance at the end of year 1. What is the balance at the commencement date? This is the balance at the commencement date, same balance. What is my ROU balance at the end of year 1? So which is my gross block, which is 2944 minus first year depreciation. This, and what is my lease liability balance? My lease liability closing balance is how much? My lease liability closing balance is how much? 35460 dollar. So 35460 I have to multiply with the closing balance, which is 70 rupee, right? This will be my commencement date and closing balance. Now, sir, your lease liability balance is 2482685, but what is your INR lease liability? Because on the day 1 you have converted a lease liability, you have converted your lease liability into INR, then you have added interest also, then you have made a payment also. So if this exchange rate would have been same, or if this would have been only INR lease liability, what would have been the closing balance? What would have been the closing balance? So my closing balance will be, my dear friends, I need to compute my exchange difference. My closing balance should be, what is my closing balance should be? This much, 2482165. What is my lease liability balance, my dear friends? My lease liability balance is 2944,044 plus I will add interest to my lease liability. The lease liability has been credited, minus I will pay the money, right? So this will be my exchange loss. My lease liability is higher than my carrying value of the lease liability. This is my exchange loss. What is the accounting entry? What is the accounting entry? So exchange loss account debit to lease liability. Okay. Exchange loss account debit to lease liability. I hope you guys have understood. You guys have enjoyed this question. Yes or no? Yes, you enjoyed? You understood this question? Yeah? Very good. Great. Great, my dear friends. Great. Okay. Again, I am moving to this. We covered this question number 5 also. Question number 5 is on application of Ind AS 116 and Ind AS 21. Okay, let's go to the other question. Question number 6, scenario 1. Question number 6, right? The last mile is a dedicated cable that connects entity-wise network with the end customer device. The last mile is a dedicated cable that connects entity-wise network with the end customer device. The use of this cable is at the discretion of the customer. Okay. Entity Y decide the location of endpoints and has right to replace the lines. However, it is not practicable to replace the line. It is not practical to replace the lines, since replacement cost would require additional cost to be incurred without any corresponding benefit. You remember, for identified asset, we have covered a concept of when the lessor has a substantive right to replace the asset. Means first, lessor has to have a right to replace the asset. Number two, it is not or, it is and. The lessor should got benefited by replacing the asset, right? If the lessor is not getting any benefit by replacing the asset, you cannot call it as an identified asset. You cannot call it as a that the lessor has a substantive right to replace, right? Lessor does not have a substantive right to lessor has a substantive right to replace. You cannot say that, right? So friends, for being any asset, for making any asset, right, as an identified asset, number one, the it has to be explicit or implicit identified in the contract. Number two, the lessor should not have a substantive right to replace the asset. Means lessor should not get any benefit by replacing the asset. Okay. And this is identified asset, means this is physically distinct. Okay. The cable. Okay. So whether this arrangement would be within the scope of Ind AS 116, so it is talking about the concept of identified asset. So in this case, it is explicitly or implicitly mentioned in the contract. And my dear friends, the lessor does not have a substantive right to replace the asset. So it will be covered under the concept of identified asset. So let's discuss this. Yes. Just a minute. Yeah. Yes. Case 1. As per paragraph of this, forget about it. Last mile, which is dedicated cable, is an identified asset since it is physical distinct. There are no substantive substitution right with entity Y, as it does not have the practical ability to substitute alternative asset throughout the period of use, and of course he is not getting any benefit. Thus, this arrangement is within the scope of Ind AS 116. Okay, 116. Okay. Now moving further. Case 1, scenario 2. If it is practical for the entity Y to replace the lines and entity Y would get benefit also, then your answer would be different. Of course, yes. In this case, in scenario number 2 of case number 1, this will not be considered as an identified asset. In the first case, it is identified asset. In the second case, it is not an identified asset. In the first scenario and second scenario. Case 2. Customer X enters into a 10-year contract with a utility company. Customer X enters into a 10-year contract with a utility company. Okay, with a utility company, right? So entity Y, for the right to use 3 specified physically distinct fibers within a large cable connecting Mumbai to Delhi, right? So customer X entered into a 10-year contract, lease period is 10 years, with a utility company entity Y for the right to use 3 specified physically distinct fibers with a large cable connecting Mumbai to Delhi. So for 3 fiber cable, it has entered into a contract with entity Y. Okay. Customer makes the decisions. Customer makes the decisions about the use of the fibers. Customer makes the decision about the use of the fibers by connecting each end of the fibers to its electronic equipment. So customer make the decision. Okay. So customer is making a decision how to use and for what purpose it is going to be used, right? Entity Y owns extra fiber but can substitute those for customer fiber only for reason of repair, maintenance and malfunction. So this lessor has a right to replace but only in case of any repair or damage. Means lessor does not have a substantive right to replace the asset. It is identified as physically distinct, and this customer has a right to control the use of the asset also. The life of the fiber is 15 years. Whether this arrangement is covered under Ind AS 116? Yes, it is an identified asset, and right to control the use of asset is lying with the lessee, right? So if you can see, this arrangement is within the scope of Ind AS 115. 115. Sorry, 116. Okay, Ind AS 116, right? Because of these two items, because of this identified asset and right to control the use of the asset. Then go to case number. Sir, do we need to write like in this Word file, the detailed answer is written? Do we need to write all these things? No. You need to write only what is the condition of identified asset, what is the condition of right to control the use of the asset, and then considering those conditions, you need to evaluate the case 1 scenario 1, 2, case 2, case 3, and you need to provide your answer. That's all. You are not required to write any paragraph number and the exact technical language. No. Okay. If you remember the exact technical language, that is good. But if you don't remember, at least it should not be wrong in substance. Okay. Case 3. Customer X enters into a 10-year contract with entity Y for the right to use a specified amount of capacity, within a cable connecting to Delhi. Okay. Right to use a specified amount of capacity within a cable, not the full cable, not the 100% capacity. So some capacity within the cable. The specified amount is equivalent to customer X. The specified amount is equivalent to customer X having the use of the full capacity of 3 fiber strands within the cable. The cable contains multiple fiber with similar capacities. Okay. The specified amount is equivalent to customer X having the use of the full capacity of 3 fiber strands. You must have seen the fiber, na? So basically, this is what the fiber is there. And within the fiber, there are a lot of, strands are there within the fiber. You must have seen that, right? So if I talk about this cable, this customer is using a limited capacity. And within this limited capacity, this customer is using only these 2-3 strands. Full capacity of this 2-3 strands, this customer is using. Okay. Full capacity of 2-3 strands. Strands means the smaller element within that fiber. Entity Y makes decisions about the transmission of data, makes decision about which fiber are used to transmit customer traffic. So here customer is controlling or lessor is controlling? Here Y is controlling, right? And the useful life of the fiber is 15 years. Whether this arrangement is covered under Ind AS 116? First, it is not an identified asset. Why? Friends, the standard says that when the lessee is obtaining a capacity for portion, when the lessee is taking a portion of the capacity of the full capacity on a lease basis, it will not be classified as identified asset until and unless it is physically distinct or the entire capacity is taken by the lessee. Let me give you an example. Have you seen the tanker? Milk tanker, gas tanker, petroleum tanker? For example, so this is a tanker, right? For example, this is a tanker. Okay. This is a tanker, right? In this is a petrol tanker, petroleum tanker. And the oil companies, these petroleum companies entered into a contract with a logistic company to transport the petrol from refinery to their warehouse. Okay. And all the three oil companies, IOCL, HPCL, and BPCL, entered into a contract with this logistic company. Now, this is 100% capacity. So, IOCL is using 40% capacity. BPCL is using 50% capacity. And HPCL is using 10% capacity. My dear friends, please tell me, in a tanker where it is full of petrol, can IOCL say that this 40% capacity is my, lower? This 40% is nothing. This 40% is the lower portion of the petrol. Or can BPCL say this 50% belongs, the left side of the petrol, the left side of the tanker, this 50% belongs to me? So nobody can distinguish that this 10% is coming from which part, 50 from which part, 40 from which part. Nobody can be able to identify it. So friends, standard says that if an entity is taking a lease of a portion of a capacity, it will not be considered as an identified asset until and unless the entity is taking, the lessee is taking a substantial capacity, more than 90% of this entire thing. So friends, likewise here in the cable, it is only a few capacity. It is only a portion of the cable capacity, right? Second, the right to control the use belongs to the lessee. The right to use belongs to the lessee. Okay. So hence, my dear friends, so this will not be considered as a identified, since identified asset is not there, and it is also right to control the use of asset has also not been transferred to the lessee. It will not be considered as a lease contract within Ind AS 116. So whatever amount this lessee is paying as a lease rental, it will be charged to P&L as a rent expense to bank. Okay. Great. Now let's go to question number 7. A good question, a good revision on your lease payments, right? Yes. So lessor, yes. So here this question is talking about the lessor accounting. Let's discuss lessor accounting also, right? So that we'll revise. Question number 7, lessor accounting. Okay. A company manufactures specialized machinery. The company offers customers the choice of either buying or leasing the machinery. A customer chooses to lease the machinery. Detail of the arrangement are as follows. The lease commences on 1st April 20x1 and lasts for 3 years. So commencement date is given and period is 3 years. Period is 3 years. The lessee is required to make 3 annual rentals payable in arrears of 57,500. So lease period is 3 years. What is meant by payable in arrears? Means at the end. At the end. The lessee is required to make 3 annual rentals payable in arrears of 57,500. The leased machinery is returned to the lessor at the end of the lease. The leased machinery is returned to the lessor at the end of the lease. Okay. Okay. The fair value of the machinery is 1,50,000, which is equivalent to the selling price of the machinery. So fair value of the machine is also given. The machinery cost 1 lakh rupee to manufacturer. The lessor incurred cost of 2,500 to negotiate and arrange the lease. Right? So lessor incurred cost of 2,500 and machine cost 1 lakh to the manufacturer. The expected useful life of the machine is 3 years. And the machine has an expected residual value of 10,000 at the end of 3 years time. The estimated residual value does not change over the term of the lease. The interest rate implicit in the lease is 10.19%. The lessor classify the lease as a finance lease. How should the lessor account for the same in the books of accounts? Please pass necessary journal entries. To summarize this question, what this question has given as a information. First of all, let's summarize the information. Lease period is 3 years. Okay. The lease rental payment is at the end of the year 57,500 per annum. Okay. And the fair value of the machine. The fair value of the machine is 1,50,000 rupees, which is equivalent to the selling price also. And the cost of the machine is 1 lakh rupee. And lessor has incurred a cost of 2,500 rupees. Right? And there is a residual value also, which is 10,000 rupees. And interest rate is 10.19%. And this is a finance lease from the lessor perspective. Now the question is asking how the lessor will account for the same in the books of accounts, pass the necessary journal entries. Pass the necessary journal entries. So my dear friends, this, if you see this question, this lessor is the trader of the machine, right? Like the customer, and what this lessor is providing, the lessor is a manufacturer, dealer, and lessor. The lessor is a manufacturer, dealer, and the lessor, right? So the lessor is selling the machine also, and lessor is providing the machine on lease also. Okay. The lessor is providing the machine on the lease also. Okay. Now, my dear friends, if I'll talk about inventory, what is my inventory? If I talk about my inventory, so what is my cost? What is my cost of the inventory? What is my cost of the inventory? It is written now. The machinery cost 1 lakh rupee to manufacturer, and the lessor incurred cost of 2500 to negotiate and arrange the lease, and there is a 10,000 rupee which is receivable at the end of the lease term. So tell me one thing. What is my cost of sales? What is my cost of sales? Tell me one thing. What is my cost of sales? Or let me give you, first of all, let me talk about the finance lease accounting. Okay, what is a finance lease accounting in the books of the lessor? First of all, what lessor do, in case of a finance lease, lessor will de-recognize the asset. Here the asset is inventory. So lessor will de-recognize the asset. And lessor will recognize the lease receivable. And lessor will recognize the lease receivable at the present value of the future lease rentals plus unguaranteed residual value. Means whatever is the fair value of the lease payment, right? Lessor will record the lease receivable by that amount, and lessor will credit the asset. Lessor will de-recognize the asset. Okay, and lessor will de-recognize the asset. In this question, the lessor is a manufacturer. This lessor is a manufacturer, dealer, and lessor. Okay. You can see, na, a customer choose to lease the machinery. The company offer customer the choice of either buying or leasing the machine. Okay. So let me solve this question for you guys. Question number 7. Question number 7 of the word 5. First of all, lessor has to de-recognize, step number 1. So finance lease accounting in the books of the lessor. Finance lease accounting in the books of the lessor. Step 1. And let me take the step in my detailed class so that I don't need to write it. Okay, and I will be able to save the time. So just a minute, let me take the finance lease steps from my last class, my detailed class. Okay. Step number 1, lessor has to de-recognize the asset. Step number 2, lessor has to recognize finance lease receivable, which is my net investment in the lease, which is my present value of future lease payments plus unguaranteed residual value. Okay. So my dear friends, the lease receivable is given in the question. Lease receivable account debit. Lease receivable account debit. This is given in the question. This is 1,50,000. This is 1,50,000 lease receivable debit. 2. What I should de-recognize? This machine is an inventory for me. Inventory for the lessor. Me means lessor. 2 inventory. What is the value of the inventory? The cost to the machine is 1 lakh rupee. The cost to the machine is 1 lakh rupee. Okay. Now, friend, what is the cost to sales? What is the cost to sales? What is my cost to sales? You remember, if you sell the asset, what you have to do? You have to debit your cost to sales and you have to credit your inventory. So what is my cost to sales? My cost to sales is how much? My cost to sales is cost of machine, which is my 1 lakh rupee plus 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 negotiation expense, plus some cost was also there, na? Some incremental cost. How much was the incremental cost? It was 2500, I think. It was 2500, yes. 2500. And you remember there was a residual value also. That is a gain, na? Residual value. Because once you de-recognize, so you will not enjoy the fruit of this once you transfer the risk and reward. So whatever will the residual value, he will enjoy the fruit. So you are also considering the residual value, but this will come 10,000 rupees is the residual value, but this will come after 3 years. 10,000 divided by 1 plus 10.19% to the power 3. Okay, so it is coming at as 1 minus 7474 minus 7474. Okay, so this is my cost of sales. This is my cost of sales, 95,030 rupee. All right, so cost of sales account debit 95,030 rupee, right? Inventory credit, then to bank credit. What is this? 2500. You are paying this, na? Right now you are paying this. Okay, 2500. You have to pay this, which is 2500, right? So now, what is the differential? What is the differential? Either the differential should be to profit on derecognition and recognition of lease receivable, to profit on finance lease, but it is a manufacturer, dealer and lessor. So in this case, it will go to revenue from operations, right? Debit. Sorry, this is the balancing figure, right? So this debit plus this debit minus this means this is the revenue, it is going to be credited. This will be the balancing figure. So friends, this is the accounting in case of finance lease. This is the accounting for manufacturer, dealer, lessor. Okay. I hope it is clear to all of you. Is it clear to all of you? Yeah. This question number 7 is clear to all of you, my dear friends? Yes. Yeah. So these are the accounting entries which we have already passed. So these accounting entries is for further, right? So once you record this, now what will you will do? So you record the lease receivable. So this entry has gone, this revenue has recognized, inventory has gone, bank has credited, but now there is a lease receivable. So how this lease receivable will become zero in the 3 years? Then you have to make a lease receivable schedule. Lease receivable schedule. Year opening balance, interest income, payment, closing balance. 1, 2, 3. What is my opening balance? Lease receivable ka 150. What is my interest income? 150 multiplied by how much is the rate of interest? 10.19%. 10.19% is the rate of interest, na? The rate of interest is given, na? The interest rate is given in the question. Interest rate is 10.19%, which is given in the question. Then there is a payment. How much payment is given in the question? 57,500. Lease payment. 57,500 per annum. This is what given in the question. 57,500 minus 57,500, right? So why this is 10,012? So at the end, 10,000 rupees are also going to be received, na? So this 12 rupees is a rounding of difference, right? 12 rupees rounding of difference. You can just do this thing. Okay, this is the lease receivable schedule. So this is the interest income you are going to charge. Okay, interest income. You are going to book that lease receivable account debit to interest income account. Then when the payment will be received by the lessor, so bank account debit to lease receivable account. This is how this lease receivable will become zero at the end of the 3 years, right? So these are the accounting entries. Yes. Now, yes, question number 8. How will entity Y account for the incentive in the following scenario? It is talking about the lease incentive. This question is talking about the lease incentive. This question is talking about lease incentive. Okay. How will entity Y account for the incentive in the following scenarios? Scenario A. Scenario B. Entity Y, lessor, enters into an operating lease of property with entity X for a 5-year term at a monthly rental of 1,10,000. In order to induce entity X enter into the lease, entity Y provides 6 lakh to entity X at lease commencement for lease improvements, that is lessee's assets, right? Friends, this entity, this lessor is providing a lease incentive. Lessor is providing a lease incentive, okay? Lessor is providing a lease incentive. And what is the lease incentive? How much is the lease incentive? So the monthly rental is 1,10,000. And lessor, this contract is for 5 years. So total 60 months. 60 months is the contract, right? There is a 60 months contract and the payment is 1,10,000. But on the commencement date, the lessor is providing 6 lakh rupee. On the commencement date, lessor is providing 6 lakh rupee. And the question is asking from the lessor perspective that how lessor will deal with this situation. How lessor will deal with this situation. Friends, this is a case of operating lease or finance lease from the lessor perspective. This is a case of operating lease or finance lease from the lessor perspective. क्या केस है? ऑपरेटिंग लीज या फाइनेंस लीज? It is given. It is already given. It is already given. It is a case of operating lease. It is a case of operating lease. Right? It is a case of operating lease. Okay. Friends, it is a case of operating lease. Right? Period is 5 years. So if it is an operating lease, what is the lease accounting in the books of the lessor? Very simple. Bank account debit to lease rental account. bank account debit to lease rental account. So every month this lessor is getting 1,10,000 rupees. So this lessor will do the accounting bank account debit to lease rental income account. But the point is at the first point, this lessor has given 6 lakh rupee. So two bank to hoga hi hoga, right? So two bank. So will recognize any cost. So of course it will be two bank. Two bank 6 lakh rupee. That is okay. But what will be debited? My dear friends, standard says that in case of operating lease, the lessor has to do the accounting on a straight line basis. The lessor has to do the accounting on a straight line basis. So debit will be deferred lease incentive. Debit 6 lakh rupee. Deferred lease incentive debit 6 lakh rupee. Okay. To bank 6 lakh rupee. Deferred lease incentive debit 6 lakh, to bank 6 lakh. Okay. Is that clear? Sir, what is this deferred lease incentive? This is an asset. This is an asset. Okay. This is an asset. And every month, this deferred lease, then what is the next entry? What is the next entry then? The next entry is bank account debit to lease rental. To lease rental. What is the lease rental? 1,10,000 rupees. 1,10,000 rupees. Okay. Then every month, this 6 lakh has to be, divided on a straight line basis. So then lease incentive expense account debit, lease incentive expense account debit, right? Lease incentive expense account debit. Okay. So lease incentive expense account debit, or what you can do, you can, instead of incentive, you can lease income debit. Okay. 1,10,000 you have recognized as an income. So now you will debit lease income. Okay. How much? 10,000. 6 lakh divided by 60. 10,000 aega na? 10,000. To what? To deferred lease incentive asset. 10,000. So this is how you recorded lease rental at 110. You debited lease rental income at 10,000. So your net lease rental income will be, your lease rental income will be how much? Net your lease rental income will be 1 lakh rupee. 110 minus 10, 1 lakh rupee, right? Is that clear? 1 lakh rupee. Okay. Yes. Yes, friends. Now let's go to the scenario B. Just a minute. Okay. Just a minute. Yeah. So let me show you the solution also. In accordance with the above, in the given case at lease commencement, entity Y accounts for the incentive as follows. First of all, deferred lease incentive asset account debit to cash, recurring monthly journal entries, cash account debit 110, to lease income 1 lakh, to deferred lease incentive 10,000. Okay. Right. So this is calculated 6 lakh divided by 60. Okay. Right. Let's go to the question number 2, scenario B. Entity Y enters into operating lease of property with entity X for a 5-year term at a monthly rental of 1,10,000. Again, it's an operating lease, 5-year term, 1,10,000. At lease commencement, entity Y provides 6 lakh to entity X for leasehold improvement, which will be owned by entity Y. The estimated useful life of the leasehold improvement, is 5 years. Right. In that case, what will be the accounting entry in the books of the lessor? What will be the accounting entry in the books of the lessor? Friends, so long back when I was living in a rental accommodation, so I asked my landlord what will be the rent. He told me the rent will be, let's say, 30,000 rupees. And he has given me a furnished house. Means for the row house, the rent is almost 20,000 rupees, but he has done some leasehold improvement, right? He spent some good money and he's charging a lease rental to me. Now the question is, whatever renovation he has done, whatever furniture and fixture, whatever leasehold improvement he has done, so this is the asset to him, na? This is the asset to him. And what lessor will do? Lessor will depreciate that asset over the lease term. Over the lease term means over the leasehold improvement period. Not over the lease term, over the leasehold improvement period, right? So in this case, it is very simple. In this case, it is very simple. First of all, what lessor will do? Lessor has not given any money to the lessee, not any incentive to the lessee. Whatever leasehold improvement lessor has done, lessor will debit fixed asset, property, plant and equipment debit to bank. Okay, 6 lakh rupee. Then he will record bank to lease income 1,10,000 rupees, and he will charge depreciation on the 6 lakh rupee, depreciation to accumulated depreciation 10,000 rupees. This is what accounting he will do. Okay, so the only thing is, since he has not given any incentive, he has done the renovation, he has given the leasehold improvement. So this leasehold improvement has to be capitalized as an asset and has to be depreciated over the life of the leasehold improvement. Okay, is that clear, my dear friends? Is that clear? Yeah. Few students were asking to discuss sublease concept. Okay, to discuss the sublease concept. So let me discuss the sublease concept and let me revise the sublease concept with them. Just wait for a minute. Let me open my detailed class notes so that I will use those notes and quickly tell you this sublease arrangements. Just allow me 2 minutes. Yes. Sublease arrangement. Okay. So friends, let's understand with the help of an example. What is mean by sublease? You all understand. A lessor has given an asset to the lessee on a lease basis. Lessee is again subleasing the asset to another lessee. Okay. So understand this with the help of the example. A Limited leases car to B Limited for 7 years. B Limited subleases this car to C Limited for 7 years. Okay. So A to B, B to C. There are two contracts between A to B. A is the head lessor. A is the main lessor, primary lessor. And B is the head lessee, primary lessee. Okay. But now B is entering into a contract with C. So B become the intermediate lessor in this case. While B is the primary lessee, but B become the intermediate lessor in this case, right? And C become the primary lessee. Life of the car is 9 years. Life of the car is 9 years. Okay. Life of the car is 9 years. Lease rental charged by A Limited is 10,000 per year, payable at the end of the year. Lease rental charged by B Limited is 12,000 per annum, payable at the end of the year. Okay. So A is charging 10,000 rupees from B and B is charging 12,000 rupees from C. Discount rate considered by all the parties is 10%. A Limited is the head lessor, primary lessor, main lessor. B Limited is the primary lessee and intermediate lessor, right? And C Limited is the ultimate lessee. It is the C who is ultimately using the asset for 7 years. Now let's do accounting one by one. So life of the car is given and this lease period is given. So First of all, for doing a sublease accounting, we will split the contract. Split the contract means we will evaluate the first contract separately, second contract separately. Contract between A Limited and B Limited. A Limited is doing a lessor accounting as per finance lease. A Limited is doing a lessor accounting as per finance lease. Okay. So A Limited has to do the lessor accounting as per finance lease. Why? Why finance lease? Why not operating lease? A Limited is the lessor. There were 5 conditions in the lessor guidance. So when there is a option of purchase to the lessee, when there is a reasonable certainty that lessee will purchase and it is at a very nominal price, when the life of the lease, when the lease period is equal to major part of the economic life, major part means more than 75%. So 7 year is the lease period, and life of the car is 9 year. So 7 divided by 9 comes at a 80% almost. Okay. So it is more than 75%, or where the lease payment is substantially equivalent to the fair value of the asset, which is more than 90%, and lease asset is of a customized nature. If these conditions are there, any of these conditions, it can be considered as a finance lease, right? So A Limited will record this asset as a finance lease. And what A Limited will do? A Limited will de-recognize the car and record the lease receivable. Now what B Limited will do? In the first contract, B Limited is a lessee. So he will do the ROU accounting, as simple as that. So what B Limited will do? 1 to 7 year, 10,000 is the lease payment. 10% is the discount factor, present value factor at the rate of 10%. This is the present value. What A Limited will do, the present value of the lease payment is 48,684. He will debit right of use asset account debit to lease liability. He will debit right of use asset to lease liability. Okay. Right. Now, the second aspect. Contract between B Limited and C Limited. Right. So what we have seen from the lessor perspective, lessor will de-recognize the car, PP&E, and lessor will recognize the financial asset, which is lease receivable. And lessee, which is B Limited, will recognize the ROU and recognize the lease liability. Contract between B Limited and C Limited, where B Limited is an intermediate lessor and C Limited is the ultimate lessee. Friends, now B Limited become a lessor. B Limited has to do the lessor accounting. Tell me whether it is an operating lease or finance lease for B Limited. Friends, in the sublease contract for the lessor accounting, lessor has to see the lease classification will depend on the lease period of sublease comparing with the lease period of the main lease. Right. So what is the lease period of sublease? 7 year. What is the lease period of main lease? 7 year. Not the life of the car. So sublease period has to be compared with the primary lease period. 7 versus 700% finance lease accounting. Sir, what happened if this B Limited would have subleased only for 4 years? Then it will be operating lease accounting, B as a lessor. Okay. So this will be a finance lease accounting, and what B Limited will do? B Limited will de-recognize the ROU. B Limited has capitalized the ROU 48,684. So B Limited will de-recognize the ROU, right? And B Limited will recognize the lease receivable. How B Limited will de-recognize the ROU? Let me tell you. In the finance lease accounting, B Limited will compute present value of future lease payments. B Limited will receive 12,000. He has paid 10,000. He will receive 12,000, right? This will give 58,421, which is my present value of the gross lease payment receivable. Okay. So what is the accounting? What accounting will happen in the books of the B Limited as a intermediate lessor? Finance lease receivable account debit. Finance lease receivable account debit, right? To right of use asset, and differential will go to the profit on derecognition. Now, what is the balance sheet position in the books of B Limited? In the books of B Limited as a primary lessor and the head lessee, there is no ROU. Why? It has been derecognized. But B Limited will recognize another asset, finance lease receivable, as a 58,421. The profit on derecognition of ROU 9737 will go to retained earning. and B Limited is still obligated. So this financial lease receivable reflect the lease payments to be received from C Limited, that is sublessee. Right. This lease liability reflects the obligation of payments towards A Limited. Right. What is the P&L position? Whatever is the interest income, right? Since B Limited has recognized finance lease receivable, so B Limited will recognize interest income every year, right? So interest income and then interest expense on the liability which he is paying. Okay. So interest expense on the lease liability, interest income on the finance lease receivable. What is the accounting in the books of C Limited? Very simple. C Limited is the ultimate lessee. He will compute the present value of the lease rental and he will recognize ROU and he will credit lease liability, right? This is the sublease accounting. This is the sublease accounting, my dear friends, which you want to understand, right? Is that clear to all of you? Is that clear or clear? Is that clear or clear, my dear friends? Tell me. That is clear? I hope that is clear to everyone. Any question? Any further question? Any further question? Yeah? No question? Okay. So quickly, let me ask you a question. Yes, let me ask you a question. Just a minute. Yeah. A Limited has taken an office on a rental basis for 1 lakh for 3 years from B Limited. A Limited is the lessee, B Limited is the lessor, right? And B Limited IRR is 10%. B Limited IRR is 10%. Okay. A Limited can take a loan for the same asset for a period of 3 years at 8%. Compute the ROU and lease liability at the commencement date. So, in this question, the interest rate implicit in the lease of the lessor is given at 10%, and A Limited can take a loan for same asset for a period of 3 years. IBR is also given. Incremental borrowing rate to the lessee is also given, which is 8%. And the accounting has to be done in the books of the lessee. So whether you should use the discount rate applicable to the lessor or discount rate applicable to the lessee, you need to compute the ROE and lease liability on the commencement date. My dear friends, you remember I told you interest rate implicit in the lease and IBR. I told you for discounting the future lease payments, if IRR, if interest rate implicit in the lease of lessor is given, you have to use that. If it is not given, then only you can go to the lessee's IBR, incremental borrowing rate. So in this case, in this question, lessor IRR as well as lessee IBR is given. Hence, we will take lessor IRR to compute the present value. And this is how you will compute the present value. 1 lakh rupee lease rental, 10% discount rate. This is your present value. And right of use asset to lease liability. This is your accounting. Okay. Is that clear? Is that clear, my dear friends? Yes. Example of initial direct cost is legal fees, stamp duty, court fee, etc. Right? Okay. Are you okay in this case? Or there is any problem? Is there any problem? Yes, no. Let's discuss this question. A Limited has paid an advance rent of 10,000 on 15th February. The asset is given on a lease on 1st April 2024. Oh, he has given an advance. The annual rental is 1 lakh for 3 year. Interest rate implicit in the lease is 10%. Rental payment is at the beginning of the year. Compute ROU on the commencement date. First of all, what entry you will pass? 15th February. Lessor account, advance rent account to bank. lessor account or advance rent account debit to bank of 10,000 rupees. Then on 1st April, what is the entry? 10,000 you have already paid. You will pay on the commencement date. In the beginning, you will pay 90,000. 10,000 already paid, 1 lakh, 1 lakh. So what is the present value factor for this 90,000 rupees? It has to be 1 because it is on the commencement date. For next period, this divide by 1.1. For next period, this divide by 1.1. Technically speaking, while the term is 3 years, but the payment is happening, the first payment is happening in the beginning, the second payment is happening at the end of the first year, and the third payment is happening at the end of the second year, right? So this will be your present value of the lease rental. Now, what is ROU accounting? ROU is equal to present value of future lease payment plus any payment made on or before commencement date. ROU asset account debit to lessor or advance rent account to lease liability account. This will be your ROU. And what is your lease liability to bank? Next entry, lease liability to bank, 90,000. Okay. Is that clear, my dear friends? I hope you have enjoyed the session, right? So what we have covered since morning, we have covered the concept of identified asset. We have covered the concept of right of control, the use of an asset, right? We have covered the concept of inception date of the lease, commencement date of the lease. We have covered the concept of interest rate implicit in the lease, incremental initial direct cost. We have also discussed the accounting of ROU asset in case at the end or at the beginning. We have covered the concept of lease liability. We have covered the concept of, separation of the lease and non-lease component. We have covered the concept of subleases. We have covered the concept of leases in case of payment in the foreign currency. We have covered the concept of what? What else we covered? और क्या कवर किया हमने? In the complex question, what we else we have covered? We have covered the concept of to evaluate the contract, whether it is a lease contract or is it a purchase contract, right? Then we covered the concept of leases in the books of the lessor, in the books of the manufacturer, dealer and lessor, right? Finance lease accounting we have covered in the books of the lessor. Okay. So friends, all these aspects we have covered in today's class. Okay. In detail, we did lot of questions from this word file. Okay. So I would request all of you, please, if you have not covered the detailed class, please cover the detailed class where the notes has already been provided, where the every concept has been discussed in detail with lot of questions from the Board of Studies ICAI material, right? And of course, do more and more practice because this is a very lengthy standard, very detailed standard. So do more and more practice to have a control over this standard. Thank you so much. If you do not have any question, I would be happy to, conclude the class. Thank you so much. Bye-bye. Take care. Thank you. Yes. Yeah, session is over. Yes. Thank you.